Hi, welcome to the Resources Roadhouse. I'm Wally Graham. I'm at the RIU Sydney Resources Roundup, where I'm talking to Nicholas Frappell from ABC Bullion. Now, Nick, just before we came on air, we were discussing the gold bar that you've got sitting here today. So today it's worth around about
1.4 million Aussie and about 890,000 US dollars.
So let's we'll speak in Aussie dollars because they're the ones we spend. So 1.4 million this year. Last year we were standing here, the same bar was worth around about 1.2, I believe.
Yeah, that's right. Yeah, I believe so. So it's done pretty well. We've seen quite a lot of physical demand that's been maintained even at these higher spot prices. Sometimes, physical demand, obviously it is price sensitive. But I've been surprised and impressed by how much physical has come through from Asia in particular in the last quarter. Even during those periods when you saw some really high demand or high prices, you still saw demand kind of coming through. What's driving that? I think if you look at China, you're seeing definitely like a younger generation coming through that's kind of friendly to gold because they're wary of the property market. Property market's been sliding for, over a year now in China, according to official data. It's probably weaker than it looks, basis official data. And then you've had a fairly long decline in Chinese equities as well. So given the sort of choice of things to invest in, I think a lot of Chinese are thinking, gold is nice. It's protecting us from a weaker yuan. It's protecting us from sort of declining other asset classes.
Yeah, and China, of course, is not the only gold market around there that's driving the interest. There's, worldwide thinking about gold at the moment, isn't there?
Yeah, that's right.
Yeah.
I mean, gold is very much, front and center, whether it's east or west. Indians have been pretty good buyers, but also you're seeing some pretty striking flows in the COMEX and so on, where you're seeing some pretty decent pivots, notwithstanding the fact that interest rate expectations in terms of decline, not nearly as strong as they were at the beginning of the year. So gold's been fighting quite a few headwinds, but it's been doing pretty well nonetheless. Very well.
Yeah, well, I mean, it's always going to be the go-to when things are sort of, not looking very well around the place.
Yeah, exactly. And of course, there is that geopolitical context as well. We've got probably issues on, say, three fronts, if you like, and you can't measure that part, but it's certainly part of the story, and it sort of helps provide a sort of backdrop to the investment case.
Yeah. All right. In the next couple of days here at the conference, what do you sort of hope that people are going to start appreciating about gold?
I'm going to sort of talk today about some of the things we've already covered off and so on, and go into a bit more detail about that. I think gold's still got a pretty positive outlook. There are some, those headwinds still matter. So, it's not a sort of a staircase, the inevitable staircase higher, but the positive factors behind gold's rally, remain in place. There's good cause for thinking that through this year it can go higher. Yeah,
and even though, as we were saying, it's had a nice 12 months, it's still a good time to get in.
Most likely. I think a lot of things for Australian investors as well will pivot on what the RBA is doing and what the RBA does through the rest of the year, because that's going to matter in terms of what people are facing in terms of Australian interest rates, and also, of course, the Aussie dollar value of gold is going to be hinging on what the RBA does too.
Yeah. All right. We'll wait and see, and and we'll catch up again next year probably, and maybe let's hope that this goes to about 1.6 by then.
Excellent. Yeah,
all right.
Definitely.
No worries, Nicholas. Thanks for your time.
Not at all. Pleasure.